Today wasn't just another day in the crypto market. It was a turning point. After years of legal battles, uncertainty, and non-stop speculation, XRP finally entered Wall Street with the official launch of not one, but two major ETFs. Grayscale stepped in with its GXRP ETF, and Franklin Templeton followed with its own XRPZ ETF, both going live on November 24, 2025. For a token that's been dragged through courtroom headlines for most of its life, seeing these giant institutions put their names behind XRP feels like the moment the narrative finally changed. But what truly shocked the market today wasn't the ETFs themselves. It was how fast everything moved once trading opened. Because the first few hours of trading revealed something that many of us didn't expect. XRP has a real place in the traditional financial world, and investors weren't waiting around to prove it. Early inflows jumped faster than analysts projected. Liquidity surged, and XRP's price reacted immediately. Today's launch wasn't hype, it was demand, and it was loud. If you believe XRP just entered a new chapter after today, go ahead and hit that like button, because what unfolded in the first hours of trading tells us far more about XRP's future than any prediction ever could. Before we talk about the numbers, the inflows, and the price movement, we need to take a step back. Because the story of today doesn't start at 9:30 a.m. when trading began. It started months ago. And understanding that context is key to understanding why today mattered so much. How we reached ETF launch day. For years, XRP was stuck in a strange position. It was one of the oldest and fastest digital assets, yet it was kept out of ETF conversations because of its endless regulatory drama. While Bitcoin and Ethereum secured ETFs early, XRP sat in the background, undervalued, misunderstood, and constantly debated. But everything started to shift after Ripple's partial court victories and rising institutional interest throughout 2024 and 2025. Slowly, the industry began to reconsider XRP not as a speculative token, but as a legitimate liquidity asset with real-world utility. In the weeks leading up to November 24 launch, rumor after rumor appeared online about which institution would receive approval first. Analysts pointed at Grayscale, others at BlackRock, and many believed Franklin Templeton was preparing a major push. But when the final approvals landed, it was Grayscale and Franklin Templeton who moved first, two market giants stepping directly into the XRP ecosystem. The news hit the crypto community like a shockwave. Suddenly, what felt impossible for years became a reality overnight. By the time launch day arrived, the mood in the XRP community had completely changed. No more if or maybe, it became XRP is next in line with the big boys. And the moment trading opened, that confidence spilled directly into the market. But nothing prepared us for the speed of what happened next.
First hour trading shock. The first trading hour was explosive. The second GXRP and XRPZ opened, volume poured in far faster than analysts projected for a first-day product. These aren't meme coins or small funds. These are ETFs backed by two of the biggest asset managers in the world. And in that very first hour, demand made it clear that people weren't dipping their toes. They were diving in. GXRP, Grayscale's ETF, moved with strong early momentum. This wasn't surprising. Grayscale already had brand recognition from its Bitcoin and Ethereum products. But the real surprise was Franklin Templeton's XRPZ ETF, which saw a burst of early activity that analysts didn't expect. Franklin Templeton isn't just a big name, it's a legacy finance titan with decades of institutional reach. Seeing them push aggressively into XRP sent a message that the broader financial world now views XRP as part of the long-term landscape, not a speculative gamble. What made the first hour so interesting wasn't just inflows, but who those inflows came from. Analysts noted that a mix of retail and institutional buyers were active from the start, meaning this wasn't one-sided demand. The market reacted fast, and the reaction didn't come from hype. It came from actual money moving. But this early activity was only the beginning, because XRP itself responded instantly. XRP's price movement on day one. As soon as the ETFs went live, XRP began climbing. The price quickly reclaimed the $2 level, and for a moment, it looked like momentum was about to push it higher. Volatility spiked, trading volume surged, and online speculation exploded. Some traders claimed whales had been accumulating ahead of the ETF launch, expecting a bigger breakout. Others argued that the inflows alone were enough to drive the spike. Either way, one thing became obvious. Wall Street's attention was pushing XRP back into the spotlight. The interesting part wasn't just the price moving, it was how the market reacted to every ETF-related announcement in real time. Each new inflow update caused another wave of buying. Each price dip became a buying opportunity. For the first time in years, XRP wasn't moving because of rumors. It was moving because of real institutional demand. And this is where we take a second, because if you want to stay ahead of every major XRP signal, every ETF update, every inflow shift, and every breakout pattern before it happens, make sure you hit subscribe right now. Today proved one thing clearly. XRP's future updates won't be slow or subtle. They will be explosive.
Day 1 ETF inflows. Across all XRP ETFs that launched today, early inflows reached an estimated $170 million to $180 million within the first trading window. For a first-day ETF launch, especially for an asset that spent years in regulatory limbo, these numbers are extremely strong. When Bitcoin ETFs launched, they hit billions. When Ethereum arrived, the numbers depended heavily on market conditions. For XRP to pull nearly $200 million on day 1 speaks volumes about pent-up demand. Grayscale's GXRP ETF saw a strong early response, especially from traders who were familiar with Grayscale's previous crypto products. But Franklin Templeton's XRPZ ETF wasn't far behind, and many analysts believe XRPZ may attract more long-term institutional interest because of Franklin Templeton's legacy credibility in the traditional markets. What made today's inflows even more impressive was how stable they remained. Instead of seeing a quick surge followed by a slowdown, demand kept coming as the day progressed. Analysts described the inflows as strong, confident, and surprisingly balanced, and they weren't wrong. But the institutions weren't the only ones reacting. Wall Street itself had something to say. Wall Street's reaction. The mainstream financial media responded with a tone we rarely see for XRP: positivity. Instead of skepticism or dismissive coverage, the narrative today focused on how much the ETF launch validated XRP as a legitimate long-term asset. This tone shift was massive. For years, XRP was painted as a problem child. Today, it was treated like a real contender. Some fund managers called XRP undervalued given its utility, comparing its potential to early-stage Ethereum before institutional adoption took off. But other analysts were more cautious, saying they want to see week 1 and week 2 inflow data before making larger moves. But even the cautious analysts weren't negative. They were simply waiting for more confirmation. Rumors even started circulating that a few large institutions were preparing to enter the ETF next week instead of on day 1, waiting for spreads to settle and liquidity to tighten. If that's true, the biggest inflows of this launch might not have even happened yet. But while institutions were analyzing carefully, retail traders were moving fast, and their behavior told a totally different story. Retail excitement today was undeniable. Social media exploded with screenshots, predictions, and celebrations. In the first few hours alone, XRP-related hashtags surged across multiple platforms. Retail investors rushed into ETF positions expecting immediate upside. But institutions behaved completely differently. They entered slowly, methodically, and with far more discipline. What was fascinating was the market depth. Instead of seeing thin liquidity or unstable spreads, both GXRP and XRPZ saw surprisingly strong stability. This suggests that market makers were prepared for demand and had no intention of letting spreads blow out of control. Some traders claim market makers intentionally dipped XRP early in the day to clear leveraged positions, a classic liquidity sweep move. But whether that's true or not, the behavior aligned perfectly with previous ETF launch patterns. Retail hype plus institutional patience created one of the most balanced launch days XRP has ever experienced. But behind all this excitement, there were real risks emerging in the background, risks investors must pay attention to. Market risks revealed on launch day. No ETF launch is perfect, and XRP's was no exception. One of the first risks that appeared was the premium discount dynamic. Because ETFs don't track perfectly on day 1, some traders paid slightly above market value, locking in losses if spreads tightened later. This is normal for ETF launches, but still important. Another concern was volatility. XRP's price reacted fast today, but fast reactions cut both ways. If inflows slow tomorrow or Monday, a correction could follow as hype cools down. Analysts also warned that some institutions intentionally wait for the initial retail surge to fade before entering, meaning the second wave of demand might not hit until next week. And finally, there's the risk of false expectations. An ETF doesn't guarantee instant price explosions. It guarantees access, and access takes time to convert into long-term capital. But even with these risks, the first-day reaction revealed one undeniable truth about XRP's future. What the first-day reaction means for XRP's future. Today proved something that XRP supporters have been saying for years. The world is ready for XRP. not just crypto traders, institutions, advisors, asset managers, and long-term investors. The strong inflows show that XRP isn't a speculative token anymore. It's becoming a regulated, institutionally supported asset with a real seat at the financial table. The first-day reaction also hints at something bigger. Based on patterns from Bitcoin and Ethereum ETF launches, the strongest inflows often come not on day one, but in the first 7 trading days. If XRP follows that pattern, the biggest moves may be ahead of us, not behind us. And with Grayscale and Franklin Templeton, 2 giants taking the lead, we're looking at the beginning of a multi-year shift in how XRP is accessed, traded, and valued globally. Which brings us to the final takeaway. Today's launch wasn't the end of XRP's journey, it was the signal of its next chapter. With GXRP and XRPZ officially trading on Wall Street, XRP finally stepped into the world of regulated institutional finance. The inflows, the price reaction, and the sentiment shift all point in the same direction. XRP is transitioning from a controversial token into a mainstream asset. But the real question now is simple. Do you think XRP's inflows will grow next week, or was today the peak? Drop your thoughts in the comments. I want to hear what you think. And if you believe XRP is only getting started after today, make sure you subscribe so you don't miss the next major update.